Welcome back, everyone, for another deep dive. This time, you asked us to take a closer look at health and accident insurance.
Yeah, great topic.
It's a good one. It's an important one. It's
Hmm.
one that a lot of us have um, a lot of interaction with
Hmm.
and probably not as much understanding as we should. And, it goes way beyond just like that health insurance card you keep in your wallet.
Oh, for sure.
Right.
Yeah.
And we're going to get into all the different variations and all the things that it can cover.
Yeah.
And I think you'll be surprised by some of the things that fall into this umbrella.
You'll be surprised,
Yeah.
guaranteed. But yeah, so we got a lot of material to dig through here, and a lot of information to cover. But I think our goal here is to uh make sense of it all.
Right.
It can be a little confusing sometimes, right? So we'll highlight the key distinctions between the different categories of insurance, maybe point out a few surprises along the way, and we'll start with the basics.
Yeah.
Like, how do you even define an accident or an illness? And then, we can kind of go from there and explore all the different types of health and accident insurance and then all the different ways that they're classified. Sounds good.
Let's do it. So, to start off, our sources define an accident as an unintended loss resulting from an external cause occurring at a specific time and place.
Yeah.
And that word unintended is really key.
It's huge. It's really important. And even within that, there's another important distinction, right? So most policies use the term accidental bodily injury. So that means that only the injury itself needs to be unintentional, not the event that caused it, right?
Yeah.
But some policies use the term accidental means. So this is a little more strict. It means that both the cause of the accident and the injury, neither of them were intended.
Ah, okay, so that could really trip someone up.
Yeah, it
Because
can.
you would think accidental bodily injury would cover all accidents,
You would think so.
but it doesn't part.
No, yeah. So let me give you an example. So imagine someone decides to jump from a second-story window, right? Maybe they don't intend to break their leg when they jump, but jumping itself is deliberate. So under a policy that covers accidental bodily injury, the claim for the broken leg would probably be paid.
Right, because they didn't intend to break their leg.
Exactly. The injury was an accident,
Right,
but under an accidental means policy,
right,
that same claim might be denied. Right.
because they intentionally jumped.
Exactly. Because the initial action, the jump, was intentional, even if the broken leg wasn't.
Wow, that is a nuance that a lot of people probably wouldn't think of.
Right. Yeah.
You would assume that an accident is an accident,
Yeah, you think so?
but no.
But no.
So that's good to point out, and that's definitely something you, our listener, should look out for in any policy that you're looking at. So moving on then, we have illness.
Yep.
That seems a little bit more straightforward. It's defined as any sickness or disease, whether it's something that happens suddenly or develops over time.
Yeah, that's pretty much it.
And that would include even things like occupational diseases,
Yeah.
which is something that we don't think about a lot these days. But
Yeah.
I mean,
Back in the day.
black lung for coal miners, right?
Oh, yeah, absolutely.
That kind of thing. So that brings us to, really why we have this kind of insurance in the first place. It's to cover those losses, right? Those financial burdens that come up when you have an unexpected illness or an accident.
Yeah.
And we're not just talking about medical bills.
No, no, not at all. I mean, think about it. If you can't work because of your illness or injury, that's lost income, and that can be a huge financial hit.
Absolutely. So let's break down those covered losses a little bit.
Mm.
Our sources outline 5 main types. So first up, we have medical expense insurance, which, this is probably what most people think of when they hear health insurance.
Right, right. It's the foundation of any good health insurance plan.
Right, yeah.
So we're talking about, your hospital stays, surgeries, doctor visits, outpatient care, all that stuff.
Right.
And it's really designed to reimburse you for those costs, right? Prevent you from going into debt because you got sick or hurt.
Right. And it can be really easy to go into debt, even with relatively simple medical needs.
Yeah,
So
absolutely.
it can happen fast.
Especially with, we all know how expensive healthcare is.
Oh, yeah. It's ridiculous.
So, it's really important to have that kind of foundational coverage.
Right. And one thing to remember is that there's always a kind of a balancing act, right?
Mhm.
So like higher deductibles and coinsurance amounts, they usually come with lower monthly premiums and vice versa.
Right.
So it really comes down to like how much risk are you comfortable with?
Yeah.
Right. How much are you willing to pay out of pocket if something happens in exchange for paying less every month. Right, exactly. You have to think about your own financial situation, your risk tolerance, all of that.
Totally.
So, moving on to the second type of covered loss, we have disability insurance.
Oh, yeah, this is a big one.
This is also known as income insurance, right?
That's right.
And this is specifically about replacing your income if you're unable to work.
Exactly. It's not about the medical costs themselves. It's about replacing the money you would be making if you could work.
Right, if you were healthy.
Exactly.
Exactly. And a lot of people might think, well, I'll just go on Social Security disability if I need to.
Oh, yeah, I've heard that a lot.
But our sources are very clear that Social Security disability benefits are really difficult to qualify for.
Oh, yeah, it's pretty strict.
Yeah,
And
right.
even if you do qualify, the benefits might not be enough to cover your bills.
Right. So you really should consider a private disability insurance policy, whether you get it through your employer or you buy it on your own.
Absolutely.
Right.
It's essential.
Yeah, it's a really important safeguard for your financial stability.
Yeah, for sure.
And just a couple of things about disability insurance.
Yeah.
The elimination period, which is basically how long you have to wait before the benefits start.
Right.
If you have a longer elimination period, your premiums are generally going to be lower.
Right, because you're basically self-insuring for that initial period. Exactly.
That makes sense.
Yeah.
And then the benefits are often calculated as a percentage of your pre-disability income.
Right.
And those benefits are usually tax-free if you paid the premiums with after-tax dollars.
Yeah.
Which kind of makes sense because you don't want to encourage people to...
To milk it.
Yeah, exactly, to milk the system.
Yeah. Yeah. I think our source used the term malingering.
Malingering, there you go. Yeah. All right, so moving on then, we have dental insurance.
Ah, yes.
Often a
Okay.
separate policy, but obviously very much related to healthcare.
Oh, yeah, absolutely. I mean, it's part of your overall health.
Right. So this is the one that helps with routine cleanings, fillings, extractions, all that fun stuff.
All the good stuff.
All the good stuff, yeah. And it often comes as a group benefit through an employer, and just like medical insurance, it can involve deductibles and co-insurance.
Right. But one nice thing is that routine exams and cleanings, those usually don't have a deductible.
Yeah, that's good. It encourages people to go
Exactly. Get those checkups.
get those checkups.
Yeah.
But, there are limitations, right? There are certain procedures that might not be covered.
Oh, yeah, for sure. It's important to read the fine print.
Always read the fine print. All right, next up, accident insurance. This is specifically for injuries that result from accidents, whether it's on the job or off the job.
Right, right. Covers you no matter where you are.
Yeah. And this is where we get into accidental death and dismemberment, or AD&D, which is
Yeah.
kind of the purest form of accident insurance.
Yeah. The most extreme, I guess you could say.
Right. Yeah, it's a lump sum payment if you die as a result of an accident, or if you lose a limb or some other bodily function.
Right. And sometimes you see policies that offer double or triple indemnity, which means they'll pay out 2 or 3 times the standard death benefit in certain situations.
Oh, wow.
Yeah, it can be a pretty significant payout.
Yeah, so that's something to look out for.
Definitely.
And then finally, the fifth type of covered loss, we have long-term care insurance. This is to help people who can no longer perform everyday tasks on their own.
Yeah, it's for folks who need help with things like bathing, dressing, eating, that sort of thing.
Right. And that could be due to a physical decline or a cognitive decline.
Right, so we're talking about conditions like dementia, Alzheimer's, Parkinson's, things like that.
Right.
And the focus is really on maintaining quality of life.
Right.
Whether it's through rehabilitation or ongoing care.
Right. It's interesting. The source specifically mentioned that it's not for psychological conditions like anxiety or depression.
Right, right. It's specifically for organic, physical, or cognitive impairments.
Right. So, you can see how this whole health and accident insurance thing really covers a wide range of potential financial risks.
Oh, yeah, for sure. It's a lot more than just paying for doctor's visits.
Absolutely. So now we've talked about the types of losses that these policies cover. So how about the different types of policies themselves? How are those classified? Our sources use the term classes of health insurance.
Right.
And it looks like there are a few different ways to categorize them based on, how risk is defined and how the contract is structured, that kind of thing.
Yeah, that's basically it. So one of the most basic ways to classify them is by who's involved in the contract, right? So you have individual policies, which are just for you, and then you have group contracts, which are typically offered through employers or associations.
Right.
And our source didn't get into too much detail about the differences between those two, but it's a key distinction.
Right.
They did get into more detail about the difference between private insurance and government insurance, though.
Right. So private insurance is what you buy from a company. basically. So like commercial insurance companies, service providers, groups of healthcare providers, or even self-insured arrangements that some employers or associations offer.
Exactly.
And then government insurance is what we think of as like Medicaid, Medicare, Social Security, disability.
Right, the big ones. And it's important to remember that even within those government programs, there are different ways they're funded and administered. Like Medicaid is jointly funded by the federal government and the state governments, but it's actually administered by the states.
Right.
So the eligibility criteria can be different depending on where you live.
Right.
Medicare and Social Security disability, those are mainly federal programs. And then you have the Affordable Care Act, or ACA, which created those state-based insurance marketplaces where people can buy private insurance
Right.
if they don't have it through their employer.
Right. And we can't forget about TRICARE,
Ah, yes,
the
TRICARE.
health insurance program for uniformed service members, retirees, and their families.
Right. And they have those three different options: prime, extra, and standard.
Right.
Each one has different levels of access to care and different cost-sharing arrangements.
Right, right. So the final distinction that our sources made in terms of classes of health insurance
Yeah.
is comprehensive versus limited policies.
Right, right. So comprehensive policies, they're kind of like the all-you-can-eat buffet of health insurance, right?
Right.
They cover pretty much everything unless it's specifically excluded in the policy.
Right. They use the term open peril, which I guess means open to any peril.
Exactly.
Right.
So like with private disability income insurance, it doesn't matter if you're injured at work or at home, you're covered either way.
Right.
And with major medical insurance, it covers most types of treatment, regardless of why you're sick or injured
Right.
or who you're seeing for treatment.
Right. It's about minimizing those gaps in coverage.
Exactly.
Limited policies, on the other hand, are much more specific.
Right. They only cover certain accidents or illnesses that are specifically named in the policy, and they'll tell you exactly what they cover and how much they'll pay out.
Right.
So if it's not listed, it's not covered. Simple as that.
Right. So it's important to be aware of what is and isn't covered.
Absolutely.
And these limited policies, they sound like they're really designed for very specific situations.
Yeah, often higher risk situations, or maybe to supplement a more comprehensive policy.
Right.
Like imagine you're going on a trip, you might buy travel accident insurance at the airport.
Right.
That only covers you if something happens during your trip.
Right. Right. So that brings us to limited insurance policy types.
Okay.
And as our sources point out, these policies really focus on very specific perils, losses, or circumstances.
Yeah, and because they're so specific, a lot of states require them to have a notice to insured that clearly states that it's a limited benefit policy.
Okay, so you know what you're getting into.
Exactly.
So our sources break these policies down into a few different types. You have accident-only policies,
Right.
policies that pay a fixed amount for specific diseases or impairments,
Mm-hmm.
policies that only cover specific services,
Right.
and policies that pay a fixed dollar amount per day for certain events, but not for long-term care.
Right.
And then there's another distinction that's important for our listener to understand.
Mm-hmm.
It's the difference between limited risk and special risk policies.
Right.
So like I was saying before, limited risk policy covers you for very specific circumstances,
Right.
like travel accident insurance. But a special risk policy, that's for more unusual or hazardous situations that aren't usually covered by standard policies.
Right. Right. So like a famous actress might insure her legs,
Oh, right.
or a test pilot might get a policy that only covers a specific flight.
Okay, yeah, I get
It's
it.
for those unique situations.
Yeah, those really unique situations. So let's dive into some of these specific limited policy types.
Right.
We'll start with accident-only policies, accidental death and dismemberment, or AD&D. It's kind of the classic example.
Yeah, AD&D. It's the most basic form of accident insurance.
Right. So like we mentioned before, it pays a lump sum if you die from an accident or if you lose a limb or some other bodily function.
Right. And it's important to know that most policies require the death to happen within 90 days of the accident.
Oh, wow.
Yeah, and it has to be a direct result of the accident.
Okay.
But some states have exceptions for cases of continuous disability.
Okay.
And of course, if the death is caused by alcohol or drug use, it's usually not covered.
Right. Right. Makes sense. So there are a couple of terms that are important to understand with AD&D policies. The principal sum is the death benefit.
Right, the face value of the policy.
Right. And then you have the capital sum, which is the benefit for losing things like hearing, speech, sight, or limb.
Right. And that's usually expressed as a percentage of the principal sum.
Okay.
So, like, losing one hand or foot might be 50% of the principal sum.
All right.
Losing both legs or sight in both eyes, that might be 100%.
Okay. So, for example, if you have a policy with a $50,000 principal sum and you lose a limb, you might get a $25,000 payout. And just like with life insurance, you can designate beneficiaries to receive the death benefit.
Right. Important to make sure that's all set up correctly.
Right. So moving on, we have specified disease policies, sometimes called dread disease policies.
Yeah, these are for specific diseases like cancer or heart disease.
Right.
And they usually pay out fixed amounts for certain events or procedures related to that disease. So like a certain amount per day for a hospital stay or a fixed sum for each chemo treatment.
Okay. And then we have critical illness policies or specified conditions insurance.
Right. These pay out a lump sum if you're diagnosed with a specific critical illness.
Okay, so what kind of illnesses are we talking about here?
So things like heart attack, stroke, organ transplant, kidney failure.
All right.
Some policies might even cover Alzheimer's disease or loss of sight.
Okay.
And the nice thing about these policies is that the money goes directly to you.
Okay.
So you can use it however you need to. Medical expenses, lost income, whatever. Usually there's a requirement that you have to survive for a certain amount of time after the diagnosis, usually around 30 days.
Okay. And then we have hospital indemnity insurance, sometimes called hospital income insurance.
Right. This one pays you a fixed amount for every day you're in the hospital.
Okay.
It doesn't matter how much your medical expenses are.
Right.
It's just based on how long you're there.
Okay, so it's basically like a daily allowance.
Exactly. But there can be limits on how long they'll pay, and there might be clauses about pre-existing conditions.
Okay.
And there might also be an elimination period, which means you have to be in the hospital for a certain number of days before the benefits kick in.
Okay, got it. And then there's credit disability insurance, which is kind of a niche product.
Yeah, this one's specifically to protect lenders.
Okay.
If a borrower becomes disabled and can't make their loan payments.
Okay.
So the lender is actually the policy owner and the beneficiary.
Okay.
And the borrower is the insured person.
Okay.
But the borrower usually pays the premiums, and they have to give their permission to get the coverage.
Right. Makes sense. And our source said it's sometimes called decreasing term disability insurance because as the loan balance goes down, the potential payout also goes down.
Right. Makes sense.
Okay. So then we have blanket insurance, which is for groups of people who are all exposed to the same risks.
Yeah, but maybe not at the same time.
Okay,
So like passengers on a plane, students at a school, volunteer firefighters, that sort of thing.
Okay.
The group or association holds the policy, and they don't usually require individual medical underwriting.
Okay.
So people don't have to enroll individually,
Okay.
and they don't get individual certificates of coverage.
Right.
The benefits are paid directly to the insured person, their beneficiary, or their state,
Okay.
or to their parent or guardian if they're a minor.
Okay. Got it. So moving on to some more specific types of coverage, we have prescription drug plans.
Oh, yeah, yes, those are important.
Yeah, these help cover the cost of prescription drugs that you get outside of a hospital or a nursing home.
Right. And most plans use a formulary, which is basically a list of all the drugs they cover.
Okay.
And they're usually categorized by price and what they're used for. Generic drugs, brand name drugs, specialty drugs.
Okay.
And it's important to know that most plans don't cover over-the-counter drugs.
Right.
Except maybe for injectable insulin in some cases.
Okay.
They also don't usually cover medical devices, appliances, needles, or the cost of administering the medication.
Okay.
And there might be exclusions for drugs that treat sexual dysfunction or infertility,
Right.
unless the state requires them to be covered.
Okay.
And usually there's a copayment, which is a fixed amount you pay for each prescription.
Right. Right. And then there's hearing aid coverage.
Yeah, some plans cover that. They can help with the cost of hearing tests, evaluations, and even the hearing aids themselves.
Okay.
Sometimes they cover part of the cost, sometimes the full cost.
Okay. And then there's vision care.
Ah, yes, for your peepers.
Yeah, this one helps pay for eye exams.
Right, by an ophthalmologist or an optometrist. Right. And it might also cover part of the cost of glasses or contacts.
Okay.
But there are usually limits on how often you can get new frames or lenses.
Okay.
And they usually don't cover things like safety glasses, prescription sunglasses, plastic lenses, frame upgrades, or eye surgery or treatments for eye diseases.
Right.
Those are usually covered under a medical expense plan.
Right, right. And LASIK surgery is also usually not covered.
Right. That's considered elective.
Right. So then we have short-term medical insurance.
Ah, yes, the temporary option.
Yeah, these policies usually last for a few months up to a year.
Right. They used to be just for people between jobs or waiting for other coverage to start.
Right.
But now they're also a cheaper alternative for people who can't afford the ACA compliant plans.
Right.
But you get what you pay for, right?
Right. There are trade-offs.
Big time.
So what kind of trade-offs are we talking about?
Well, there are usually strict limits on how much they'll pay out overall,
Okay.
and they might not cover outpatient prescription drugs at all. Or they might have very limited coverage.
Okay.
And they might not cover certain essential health benefits at all, like maternity care or mental health services.
Okay.
And they also usually do medical underwriting, which means they can deny you coverage or exclude pre-existing conditions.
Okay.
It really varies from state to state what they can and can't do with these short-term plans.
Right. Right. And finally, we come back to dental insurance.
Ah, the pearly whites.
Yeah, we touched on it before, but let's get into the nitty-gritty.
All right, let's do it.
So, dental insurance can be part of a bigger medical plan, or it can be a standalone policy.
Right, and if it's part of a bigger plan, you might be able to use your medical expenses to meet your deductible for dental coverage too.
Okay.
And standalone plans are usually optional.
Right.
So within dental insurance, there are a bunch of different categories of treatment that are usually covered.
Okay.
So you have diagnostic and preventive care, which is like exams, x-rays, cleanings,
Right.
restorative care, like fillings and crowns. Oral surgery, like extractions and other surgeries.
Okay.
Endodontics, which is root canals.
Okay.
Periodontics for gum disease.
Okay.
Prosthodontics, which is dentures and bridges.
Okay.
Orthodontics for braces and retainers.
Yep.
Pediatric dentistry, obviously for kids.
Right.
And oral pathology, which is biopsies and stuff like that.
Right. That's a lot of different categories.
It is. It covers pretty much everything you could think of.
Yeah, it's pretty comprehensive.
Yeah.
So how about employer-sponsored group dental plans? Are they different from individual plans?
They're pretty similar, but they use group underwriting.
Okay.
So they don't usually let you convert the policy to an individual plan if you leave the group,
Okay.
but they are subject to COBRA.
Right.
And there are usually rules about open enrollment and penalties for late enrollment.
Right, right. So the most common type of dental plan is indemnity insurance.
Right, which means they reimburse you for your costs.
Okay.
And you can choose your own dentist. So within indemnity plans, there are a few variations. You have scheduled plans, which are sometimes called basic plans.
Okay.
These plans have a set fee schedule for specific services.
Okay.
And they often don't have deductibles or coinsurance.
Okay, so it's first dollar coverage.
Exactly.
Okay, and then there are non-scheduled plans, which are the most common.
Right. These usually have deductibles and coinsurance.
Okay.
And they often have different tiers of coverage.
Okay.
So like routine and preventive care might be covered 100% with no deductible.
Oh.
Basic restorative services like fillings might have 80% coinsurance.
Okay.
And major services like crowns might have 50% coinsurance.
Okay.
And there might be deductibles for those higher tiers.
Oh.
And then there are combination plans, which kind of mix and match features from the other two types.
Right, right. So it's important to be aware of the limitations that are common in dental plans.
Oh, yeah, absolutely. So a lot of plans have annual maximum benefit limits.
Okay, so they'll only pay up to a certain amount each year.
Right, like $2,500 is a common limit,
Okay.
and there might be lifetime limits on orthodontic benefits.
Okay.
So, like, they might only pay up to $2,000 for braces over your entire lifetime.
Okay.
And a lot of plans require predetermination of benefits for more expensive procedures.
Okay, so that's like a pre-approval process.
Exactly. It's basically to make sure that the procedure is medically necessary and covered by the plan.
Right.
You might still get coverage even if you don't get pre-approval,
Okay.
but you won't know exactly how much they'll pay until after the procedure.
Okay, that makes sense. And then there are the exclusions, the things that dental insurance usually won't cover.
Right. So they usually won't cover cosmetic procedures unless they're needed because of an accident.
Okay.
And they won't cover services provided by government agencies or treatment that's covered under workers' compensation.
Okay.
And they usually won't pay to replace dentures or other prosthetics if they've already paid for them within a certain number of years. And they usually won't cover oral hygiene instructions or experimental procedures.
Okay.
And there might be limits on coverage for emergency dental services if you go out of network.
Right, right. And finally, our source talked about how insurers manage adverse selection in dental plans.
Right. Adverse selection is when people who are more likely to need coverage are the ones who buy it.
Right.
So insurers try to avoid that by doing things like stricter underwriting for standalone policies
Okay.
and those annual benefit caps we talked about,
Right.
and limiting or reducing benefits for late enrollees,
Okay.
and having longer waiting periods before certain benefits kick in,
Okay.
and having lower coinsurance for optional benefits that gradually increases over time,
Okay.
and requiring pre-approval for expensive treatments.
Okay, so they're basically trying to balance the risk.
Exactly. They want to make sure they can pay out claims without going broke.
Right. Right. Well, that was a lot of information.
We covered a lot of ground.
Yeah, we did. It's clear that health and accident insurance is a huge and complex topic.
Oh, yeah, for sure.
It goes way beyond just basic medical coverage.
Absolutely. There are so many different types of policies out there, each with its own purpose, limitations, and definitions of risk and coverage.
Right.
It's really important to understand these distinctions so you can make informed decisions about your own protection.
Right. It's about being proactive and understanding what you need.
Exactly.
So, as you, our listener, are thinking about all of this, we want to leave you with a question. What if scenarios are on your mind now? What would make you take a closer look at your current health and accident insurance policies? Or maybe consider some areas of coverage that you hadn't thought about before.
Yeah, it's worth taking the time to think about it. It could make a big difference in your financial well-being.
Absolutely. Being informed is the best way to protect yourself.
Couldn't agree more.
So thanks for joining us for this deep dive. We'll see you next time.